Okay, so last that we left off was that customer B had paid in full on May 22nd. So let's see what else happened here. So May 22nd, right? We also had a sale, right? We sold 15 mugs for $9.99 each for cash on May 22nd. So let's go ahead and record that sale for 15 mugs. Right? We're going to do the same thing, cash and sales tax payable. Okay. And I'm going to pop it down here, last part of the end of this journal. So it is May 22nd. So in this case, I sold 15 mugs at $9.99 each. So what's my total sales here?
$149.85.
Okay, how much tax am I going to charge?
$12.36.
$12.36. Okay, so in grand total, how much cash should I be receiving?
$162.21.
$162.21. And again, I'm going to make a note here that I sold 15 mugs. Okay. So then in this case, right, we're on our new journal. So let's see what happened next. So it is May 25th, all right, and you have a sale for Memorial Day, okay? All mugs are 30% off discount, okay? And you sold a grand total of 175 mugs for cash. Okay, so how do I figure out this sales discount? Okay. So on the 25th, we have a sales discount and we sold the mugs, a total of 175 mugs for cash. So how should we journalize this?
With sales tax payable, and then cash, and then I would want to say sales discount.
Good, excellent. So you got sales, right? And you have sales tax payable. And then, of course, up here, we're collecting cash as well as applying our discount. That is correct, okay? So in this context, right, why is it that we're not putting sales tax at the top? Okay, in this case, we're not refunding any tax, right? We haven't even charged sales tax in the first place. So in this case, sales tax is going to go at the end because in this case, right, we're not treating this discount as if someone paid in advance for it. So we didn't charge the sales tax, so there's no need to return the sales tax. So in this context, right, we're in store and we're selling our mugs at time of sale. We're receiving the cash, we're applying the discount, and then we're going to start charging the tax afterwards. Okay? So if I sold right now, I've said that I sold a total of $175 dollars worth of tax, right? I'm sorry, 175 mugs. So how much is my total sales going to be here? If I sold 175 mugs at full price, how much is it?
It would be 748.25.
Good, right? Now, in this case, that's how many I sold in grand total, right? I have to recognize how much my grand total is for my total sales at original price. Then I need to find out, well, how much is the 30% discount off going to be? How much is my discount going to be if it's 30% off?
524.48.
524.48. So therefore, this is the amount of tax I'm actually going to be subject to. $1,223.77 is the amount that I can actually tax because that's how much I actually sold, right? I didn't sell at full price because I end up discounting it. So I can only tax on what I actually sell or whatever the customer walks away with. So in this case, I can only charge tax based off of 1223.77. So in this case, how much tax am I going to charge off of the discounted price?
Uh, 196.
196 cents. So therefore, how much cash am I supposed to be getting in grand total for these sales? How much cash am I supposed to be receiving from the sales?
1,324.73. Is it?
Okay, so in this case, right, if my original selling price was $17.48, right, I'm going to add my tax here. But I need to subtract out my total discount. So then, because that's how much money I end up discounting. So in grand total, I should be receiving $1324.73. Okay. So again, there's many ways that you could also solve for this as well. You can apply the debits equal the credit system. Okay, that works too. But in this case, right, if I understand it this way, right, if I'm being charged, right, the full amount, I need to subtract the discount and then apply the tax, then add the tax that way. So then my total grand total would be, technically it'd be the 1223 plus the 100 to give you the 1324. Okay. And of course, I'm going to make a note here saying that I sold 175 mugs, right? And I have a Memorial Day sale, 30% discount. Okay. Once again, this was a sale, so it has nothing to do with my inventory worksheet. Okay. So let's see what happened next. Then the 25th of, or no, that's, we just said that one. So then the 28th of May rolls around. Customer C wants to buy, okay, all 50 black mugs that you have, okay? And you kindly offer him an additional discount, an additional 10% discount. Pay Visa credit card. So how am I going to record this one this time? In this case, right, this guy is buying all of our black coffee mugs, right? And in this case, right, we know for a fact that we didn't want to buy those black coffee mugs. So instead, right, they probably asked us, do you have any other color? We said we have black. And they said, okay, well, I want to take all of it. So because they're taking off the unnecessary inventory that you originally purchased, you decided to offer him additional 10% discount. So how am I going to generalize this if he paid with a Visa credit card? Let's take a look at my accounts one last time.
Checking account.
Checking account is correct because in this case, right, a credit card transaction, this is what you have to do when you're doing a real business is you're going to have to set up a credit card if you choose to allow credit cards to be accepted as a form of payment. There are a few rules and regulations that you need to know in regards to that. And we'll talk about that when we dive into QuickBooks. But when we do charge credit cards, right, or have a customer pay with a credit card, it automatically gets wired to your checking account. Okay, so in this case, checking account is where it's going to go. Okay, and how do I journalize the rest? So I'm selling, right, to customer C all 50 black mugs with an additional 10% discount. So how am I going to record this?
Did accounts receivable?
He did not pay it on an account. He paid with a Visa credit card.
Checking account.
Checking account.
Sales discount.
Sales discount.
Teacher, in this sales discount, the set additional discount. This for memorial discount 30% plus 10 or
In this case, it's the 28th of May. The sale is over. It was only one day only.
what is an additional discount means there is an essential discount plus an additional.
No, meaning that because he's buying out all the inventory that you didn't want, you gave him an additional discount. So instead
You
of
mean
him buying,
normal discount.
yes, in this case, yes, it's a normal discount. Yes.
Thank you.
Okay, so here you go. It is May 28, excuse me. We recognize that because he paid with a Visa credit card, it's going to go directly to our checking account, which is account 101. Okay. We recognize there's going to be a sales discount because we gave him a 10% discount. Okay. We sold something to him, right? So there's your sales. And of course, because we are selling a product to him, we are obligated to charge sales tax. Okay? So in this case, right, I sold 50 mugs at original full price of $9.99. So in this case, how much is my total sales?
$499.50.
Okay, $49,950, right? In this case, I'm giving him a generous 10% discount. So in this case, how much is my discount for?
$49.95.
$49.95. Okay, so therefore, the amount that I can tax this guy at is at $49.55. So how much tax am I going to be charging customer C?
$37.09.
37.09. And then last but not least, so then how much did customer C charge on their account for this purchase? Right? This is where we're going to take his full amount, add the taxes minus the discount. So how much how much did he charge on his account? How much did they pay us?
Uh,
487 something. Don't know.
No.
486.64.
486.64. Okay, good. Okay, once again, I'm going to note that we sold 50 black mugs to customer C, Visa credit card. Okay, he paid with Visa credit card. So in this case, the Visa credit card acts as if the customer had money and paid us. Okay. And of course, I'm going to put here too 10% discount. Okay. All right. Once again, this had nothing to do with the inventory, so we are pretty much done there. Okay. So then let's see what happened next. So on May 30th, you have two things, right? You paid off all 3 bills that you owe to Cuppies Co. all on one check number 201, right? And second thing is here, you have a total of 700 units left on hand. So let's go ahead and do one thing at a time. So let's go ahead and pay off the bills that we owe. We have a total of 3 bills with, and we're going to pay it off with check number 201. So let's take a look at the purchases of inventory we actually made. So first purchase of inventory we made was on May 1st, okay? All right. Now in this case, right, we end up returning some of them, okay? We end up returning 15 of the broken mugs, all right, for a full refund, okay? So we have to make sure that we understand that we purchased something and we end up returning something. However, let's take a look at here. We were also given terms. Now, in this case, the terms are 5% if you pay within 15 days. If not, you have to pay in full in 30. So in this case, did I meet the discount due date?
no.
No, I 100% missed it. So in this case, right, since I purchased it on May 1st, that means by May 30th, I'm obligated to have to pay for that batch of inventory because I was only given 30 days to pay the whole bill off. So in this case, I just have to figure out what my total amount that I owe for this batch of inventory and pay it off, the whole thing. Okay. Then on May 8th, I end up purchasing another 250 mugs, right? But I end up also getting a discount for 15% for 50 of the mugs because they were the wrong color. So in this case, I also had some changes into my purchase here, right? But let's take a look at here. I was also given terms. 5%, 15 meant 30. Did I make the discount due date here?
No.
No, because May 8th plus 15 makes it the 22nd. I already missed the discount due date period. So in this case, I do not get a discount here, but I do have changes into my accounts payable here. Okay. And then lastly, I made a purchase of inventory on May 20th. Okay, I purchased 400 mugs at $280. No changes, no returns or anything here. However, I was also given terms here as well. 5%, 15, net 30. Now, if I'm making a payment as of May 30th, did I make the discount due date period?
Yes.
Yes, you did, right? That means I have to take a 5% discount for the batch that I purchased in on May 20th, okay? So let's go ahead and plug in our numbers here into our journal, okay? Because the first thing you got to do is you got to recognize how much do you owe in grand total, because that is going to determine how much you need to pay. Accounts payable. Okay, so 201. Now in this case, let's go ahead and review, right? 1st of May, right? I end up owing $1,423, but I end up getting a return for $39.75. Okay. Then on May 8th, I end up purchasing again for a total of $737.50. Okay. But I end up refunding $20.63. Okay. And then let's see, I also bought a batch of inventory on May 20th. That gave me a grand total of $1,200. So in grand total, okay, I owe a grand total of $3,302.12. Okay. All right. So then, what should I recognize as well? So here I did my 2 batches of inventory that were, one was discounted and one was a refund. And then again, I added my entire batch of the $1,200. Now, what are the other 2 things I need to recognize here? I'll flash the chart of accounts for you too.
Cash.
We paid with a check, so not cash. If we write a check, where does it come from? It comes from a checking account. Good. Okay. What else do I need to recognize?
Purchase discounts.
We need to recognize our purchase discounts. Good. Okay. So let's go ahead and plop those numbers here. So I'm going to plug in my purchase discounts first. Okay, which is 555. And of course, since I'm writing a check, that's going to come directly out from my checking account. Okay. Now in this case, right? How much is my discount for? So let's take a look at my purchase on May 20th, right? That's the one that we were recognizing that we are supposed to get a discount here. Now here's May 20th. How my discount is that I'm supposed to take 5%. Now, in this case, which number am I going to be discounting? $11.20, because I cannot discount freight. So in this case, what is $11.20 times 5%?
$56.
$56. So then how much should I be writing my check out for?
$10.64.
10 it's $3,302.12 minus $56 gives me $3,246.12. Okay. So in this case, I'm going to say I paid Cuppies Co. for purchases on May 1st, May 8th, and May 20th. Okay. 5% discount on purchase for the 20th of May, and comma, how did I pay? I paid with the check number 201. Okay. So, if you're having trouble figuring out how much accounts payable is, this is where you're going to actually refer to the general ledger. Now, in this case, since it's too early to do the general ledger, you can do it on your own if you do want to. What you're going to do is you're going to create an account called accounts payable, okay? And what happens there is that you figure out the numbers that way. All right? You plug in. So every time you increased your accounts payable, you plug it into your general ledger. Every time you had a debit in the accounts payable, you're going to update your ledger that way. So at the end of the day, if you use the ledger, you'll end up getting this number of 3,000. What was it? $302.12. Okay, that is if you use the ledger. Now, in this case, I will show you how to use the ledger when we dive into the fictitious business. So for now, this one, I won't show you here. Okay, I might actually show it to you in the chapter 7 and 8 review as well. So other than that, yes, so hold on to the idea of the general ledger, but that's where this number will come from instead of doing it in our general journal. So in this case, I just showed you really briefly on how to just compute it through your general journal. Okay. All right. So again, I have a purchase discount. So if I have a purchase discount off of my batch for May 20th, right? Therefore, that also affects my inventory because I received a discount. Obviously, no money is involved here, but I received a discount, right? So if I received a discount, right, off of the total price of $11.20, right? That was the total price here. And I received a 5% discount, okay, which we figured to be $56. That means I didn't pay for my 400 items at the original $2.80. That's discounted by 5%. So in this case, this is where I need to make changes because I no longer owe $1,200, right? I end up owing $1,200 minus my $56. Okay? So then that brings my cost per item to $2.86. Okay? Because now I owe $11.44 instead of $1,200. Okay? So again, this is for returns, allowances, and discounts. Okay? So discounts and allowances, right? They're very similar except one is returning and one is actually discounting. Okay? So that's what you have to do here. Now, we were also given that at the end of May, we had 700 units left on hand. So in this case, 700 units is my ending balance here. So now I need to plug in all of my information to figure out my totals here. So once again, I'm just going to highlight this so we know that this is a calculation. Okay, and I'm going to make it this color here. Okay, so let's go ahead and tally up our totals. So what was my total amount of inventory that I purchased?
1150.
$11.50. All right. How much was my total purchase price?
$31,32.50.
Good. $31.32.50. Good. Okay. How much was my total freight?
$230.
$230. Okay. How much was my total cost?
$3362.50.
$33.62.50. Good. Okay. Should solve for my goods available as well as my purchase returns and allowances. Okay, so let's go ahead and solve this right here. How many goods available do I have for quantity?
$11.35
Okay.
in quantity.
What about my total cost?
It was 3246.12.
Good. Okay. 32.46.12. Okay. And then how many total units did I return?
15.
Good, 15 at a total cost of how much? Right, 116.38. Okay. So now let's go ahead and plug our numbers into our total net purchases. So again, how many items did we buy? We bought a total of 11.50, right? At a total cost of this much money, right? We end up returning 15 items, which cost us a total of $116.38. So in this case, right, that left me with $11.35 at a grand total cost of $30.16.12. Okay. Freight added nothing to quantity, but it added to my total cost. So therefore, I should have a total of 1135 units at a grand total of my 3246.12. In this case, that matches my goods available because in this case, right, we're assuming we had no beginning inventory. So therefore, my net purchases, right, is going to equal my goods available. Okay, which we verified right here that we have a total of 1135 units at a grand total of 3246.12. Okay. Now we need to solve for our cost of goods sold because in this case, right, we're given that 700 units are left remaining. So then that means my assumption is I must have sold how many units? I must have sold how many units?
435.
435 units. Okay, and I'm going to go ahead and make this column my equal sum so that I can solve for my items. Okay. So I have right now 0 here. And I have a total of my sum to be here. Okay. And I'm also going to make this my cost of goods sold. Okay. So in this case, right, let's take a look. What method are we using to calculate this inventory?
LIFO, that's
LIFO.
first.
We're going to use LIFO. So in this case, let's take a look at my goods available, right? So which batch of my inventory am I going to take out from first?
The last 400.
The last 400. So in this case, I'm going to copy this number here because I already know I'm going to get rid of the whole entire thing, which is going to cost me $11.44. Okay. How much more do I need to sell if I have 400 that is sold and I need to get to 435? How many more units do I need to sell? That's pretty straightforward.
35 out of the 250.
Good, right? We're going to take 35 out of the 250. So in this case, right, we need to calculate our cost per item, which in this case it's $2.86,478. So equal round, how much is my total cost here if I sold 35 items?
127 cents.
$100 and I got 36 cents.
Okay.
Okay. It might be a rounding error right there. Right. So therefore, for selling 435 units, I got a grand total of $1,044.36. So therefore, how much is my ending inventory?
$2001.
$2,001.76. So now that we finished our entry, or this right here, we need to do our conversion entry. Okay, so in this case, how am I going to convert this to my inventory? How do I complete my conversion entry?
You start off with your inventory or mugs.
Mugs, okay, so 150's mugs, which is my inventory, okay.
And then your purchase expense, freight expense.
Okay,
And then what am I missing?
2 more accounts. 3 more accounts.
Purchase and returns and allowance.
Good.
Cost of goods sold.
Good.
And I don't know the last one.
Okay, so good. So in this case, right, we're going to recognize the very first one, which is the mugs, right, which is account 150. Okay, we're going to also remember that we sold some of the inventory along the way. Okay, for 501. Okay, we also need to recognize that we had some purchase returns and allowances. Okay, I think that was 556, and then there's the missing account there. We have a purchase expense. Okay, and we have a freight expense. I think purchase expense was 511. And then purchase expense was 511. Okay, 511 was freight expense. Okay. So let's just plug all the numbers that we know for sure. So in this case, what was the ending balance in my inventory?
700.
700. What was the total cost?
2,000.
2001, right? How much did we sell? Or in this case, what was the total cost of my cost of goods sold?
The 1244.
1244. What was my returns and allowances?
That the 100 and something.
116. Now that includes my discount. What was my total returns and allowances?
Is the 116.38 not the number?
That includes my discount. I'm talking about just returns and allowances only.
Is that the 39.75 then for the 15?
Okay, so that's a return. What was my allowance here? The $20.63, right? So this is where it comes off different, right? This is how much my total returns and allowances was for, right? Because that's what I journalized in my journal, right? I've only touched returns and allowances for the $39.75 and then for the $20.63. My last thing that I posted here was my purchase discount, right? If I'm zeroing out all of my accounts, my discount has to be separate because it's not in terms of the same thing as my returns and allowances. It's its own separate account. So purchase discounts, and that one, right, was for my $56, right? That was the only one that was for $56, right? Because if you look right above, I charged $56 for my purchase return for my purchase discount, and that's exactly how much I have to zero out in the end of the day. So this is where you have to separate them. Okay? What was my total purchase expense?
Was that the 3,132?
Correct. And then my freight was the $230. Okay? So again, rule of thumb here is just to double confirm that my total debits match my credit. So in this case, I have $3,362.50 on the left, $3,362.50 on the right. And last but not least, my note here is to convert to inventory. Okay. Or if in case you want to put convert periodic inventory to mugs. Okay. And that is it. Okay. Now, questions and comments, concerns about why I had to separate the two here instead of place it all into one is because I have two separate accounts, right? I charged one for returns and allowances and I charged one for discounts. But on my inventory worksheet, I just combined them all together. So in this case, you do need to make sure that you have that note in your journal, that you don't add them all up at once, because a discount is different from a returns and allowance. Okay. All right. Any questions in regards to this chapter 5 and 6 exercise?
No.
No.
No, it's just a lot of information.
Oh, absolutely. And that's why I'm not going to test you on this.